Hi everybody, very good morning to all of you. I am very energetic and passionate with new topic today, and that is very uncommon topic. Most of the people don't know about capital gain and what is the income tax act on that of any property, of any asset. Property may be residential property, commercial property, bond, or gold, whatever you think. Everything is asset, and if you are buying and selling it, there is a capital gain and you have to pay the tax on that. Most of the people are not aware that if there is a inherited property from their ancestors, and what is the capital gain act on that? Friends, if the property, suppose, is coming from your ancestors and it is inherited property, then you have to know that if the property is coming to you after the death of your parents, no tax is given. But once you sell this property, within 2 years or after 2 years, as per the law, short and long term capital gain tax is applicable. If you are selling within 2 years, yes, this is short term gain. And income, whatever you are going to have, you have to pay the tax as per your income tax slab. But if you are selling it after 2 years, there is a different provision like 54 Act 54, 54 EC and 54 AF. Accordingly, the tax is applicable. Now here we are want to discuss about the capital gain. Suppose the property what you got from your parents after their death, and they have purchased in suppose 2012, and you got in 2018 after their death, then and if you are going to sell it, then if they purchased in 2012 at the cost of 1 lakh rupees, and now they are going to sell in 2 lakhs rupees, the tax gain will be applicable, and it will be calculated based on the act. Like index gain is also applicable for you, that will save your money. Suppose index at the year of 2012 was 200 rupees, and now it is 300 rupees. 300, sorry. At the time of 200, and now the index is 300. So 1.5 times of that will be the inflation will be covered, and you will be exempted from the tax. And if still you have some money after inflation that applicable to you to pay, you can save it by reinvesting it into some other residential properties or any other gold, bond or something like that. You can save it. So Capital Gain Act is applicable for all the properties, asset, residential, commercial, gold, bond, etc. You must know all these things. But if any property has been purchased by your parents in before year 2000, so there is a Fair Act law is applicable, means the fair price of that time will be as per the circle rate or as per the evidence of the proof that property has been sold those time, what was the rate, and then index capital gain will be calculated based on that. Which is very complicated, which is not very clear right now, but there is a way to save the tax based on the evidences you have. Now, now we can discuss about some capital gain tax, how you can save. If you are as per 54F, as per 54, if you are selling in property after 2 years of purchase, then the capital gain tax, long-term capital gain tax will be applicable, and based on that, if you are reinvesting into the asset of the increase of the capital gain, that you can save the entire tax as per that. But you have to reinvest you have to buy the property of the in residential only. As per 54 EC, you can buy any property and commercial, residential, and but we are selling after 3 years, then this will be applicable, and there you can save the tax by putting into the capital gain only residential property, and there you can save the tax. As the 54F, this is similar to 54, but here you have to you have to have only one house, then you are able this large applicable, and this is also applicable that you can only 50% of the capital gain can save. So there is some lacuna, all these things plus and minus, depends upon your situation. You can apply in which category you are going to save the tax. That's all for today. Thank you very much.